Hey everyone, this is Ed Keim, CEO over at Quantcha, and welcome to the May 3rd, 2015 News and Updates video. We got a couple cool things to chat about this week, including some features that have been asked for a long time that we're starting to build into the product and are making their way out to the deployment. The first one is option liquidity. This is kind of a key concept because the idea behind liquidity is how easy it is to get in and out of option positions. And for investors who enter a position and then decide later on that maybe it's not going the direction they want, or maybe that it did go in a good direction, but they're stuck in it because the liquidity is not strong. We're providing ways for you to understand the liquidity before you get into the stock itself, or rather into the option position. So let's do a quick review of what option liquidity tends to be about. The first thing a lot of people like to look at is the underlying volume, meaning that if you're dealing in options on Apple, how does Apple itself trade? Now, of course, Apple trades huge, so that's never really a concern. But there's a lot of other stocks that don't tend to have high volume, and therefore the derivative market where the options trade, in that space it's not as liquid because you don't have as many people with as much interest. The second key factor is the spread between the bid and the ask position. So typically the ask will be, well, the ask is always higher than the bid, of course, but typically it'll be close in highly liquid stocks. So for example, if the bid for an option is $1, you want to see an ask that's $1.01. That 1 cent spread is as tight as you could possibly get in general retail terms. Now, often though, what'll happen is a bid might be $1 and an ask might be $2. And that means that if you buy an option, you buy into that position at $2 a share, and then you want to immediately leave it, you're losing half your money by selling it back at the bid at $1. And so we tend to look at liquidity being if the ask is at most 5% or less than the bid, in terms of if the ask is no more than 5% higher than the bid, we consider that to be a fairly liquid situation for people trading at a retail level. And if it is higher than that, such as $1.10 versus $1, we consider that to not be very liquid. Another important factor is open interest, and this gets into the depth of the market because when it comes into the trading different sizes of what the quantity of bid and ask that are available, understanding what open interest and of course volume as well can tell you how deep the market is for given options. For the purposes of what we do with Quantcha, we don't generally deal with the depth of market at this time. We're mostly focused on the bid and ask spread, and that leads into some of the features that we've been working on. The key features that we're going to show off this week are a new exclude illiquid options filter, which is something we have on the options search that enables you to only see trades that have all options that are considered to be liquid, meaning that the ask is within 5% of the bid. And we also have, related to that slightly, is a new risk neutral trade review view. Which is a panel that's put on our trade analysis page so that you can kind of get a quick review of the trade you're looking at and you're considering opening. That just kind of covers some of the key points as a last second view into what you're looking at before you close a trade. So what I'm going to do now is I'm going to bring up the options search engine, and we've got this window here, and I'm going to use Microsoft for now. Now, one of the key things to point out here is this video is being recorded after hours it's being recorded on a weekend, therefore inherently after hours. And so when we go through and we select the expiration, we'll go to May 8th, May 8th, which is the upcoming expiration from today. The first thing we'll do is we'll go over to the option chain, and we've got this new column which is liquid. And for now, we just say yes or no whether or not it appears to be liquid based on the quick analysis we do. And you'll notice that in the case of the calls from Microsoft on May 8th, only the 42s look like they're liquid because the ask is within 5% of where the bid is. Everything else is a little bit higher. And of course, as you get further out of the money, it gets much tighter because at this point, if you're dealing with a 1 cent bid, the ask really can be no more than 1 cent higher. And so if the ask is 1 cent higher than the bid, we do recognize that and consider it liquid. But in the case of the 2 to 4 cent, we don't consider that liquid at this time. We may come back and revisit that concept. I mean, that's still kind of under discussion. But for the time being, you've got to be within 1 cent for the liquidity to be considered to be there. Now, coming back and we take a look at the trades, let's switch over to a different stock. Since we're on the weekend, one of the few stocks that shows great liquidity is the Spider options. So if we select through to that, we've got, actually we don't even need to look at that. We've got in our option chain, you can see real quick that virtually everything is liquid in this space. I mean, you get some of these that are higher up that are not considered liquid because the prices are so low, but realistically they're generally pretty liquid. And so what you'll be able to do is we've got all our options here and all the different trades, the best trades for this neutral view. If we check exclude liquid options, you'll see that a bunch of the options get knocked out, or a bunch of the trades get knocked out that included liquid options. Now, if we unselect that and we keep that available, this particular trade, as you can see, came back when we selected that. So at this point, one of these options is not considered liquid based on the after hour situation we're in right now. So if we click through on that, it gives us a chance to take a look at our risk neutral trade review. And you'll see the first thing it says here is the liquidity is that this includes one or more options that appear illiquid based on the bid-ask spread, which means that you may have some trouble entering or exiting the position at a desirable price. Most likely it's probably the least expensive option. So if we'll take a look at that in a second about these 207 puts. But you'll also see some other useful things here, such as the model that we're basing this on is a likely model because it's the default neutral model of that plus or minus 1 standard deviation. And so that looks pretty good. Unfortunately, the trade itself appears to be unlikely to be profitable, and this comes from our panel down here where we actually weight the probability of each possible outcome of a given trade across the entire spectrum of the full implied range. However, the risk reward though for this particular trade does appear to be positive, which means that the area that is most probable, has the highest weighting, is profitable, and then as you taper off it's less probable. So this is one of those situations where you'll have to make a call if you were going to trade here as to what sort of risk you're open to and what kind of return you want to see. But switching over to a different stock, let's pop back out to the Microsoft we were looking at. And I'll just pick any trade. It doesn't really matter because I want to take a look and show you for stocks that have earnings and dividends, you'll be able to see as well the next earnings announcement happens to be after the expiration here. This expiration we're looking at is May 8th. The next earnings announced for Microsoft is July 28th. And there's a dividend, and this isn't considered. You'll notice that we've got green, which indicates a good sign, red indicates a bad sign, and the yellow are sort of like warnings. And so the warning around the dividend is that, depending on the circumstance you're in, you may or may not care about when the dividend is going to be. So in this particular case, we've got a trade here, and let me see if I can't push us out past the May 19th dividend date. And so you'll see at this point, we're now looking at a dividend that's before the expiration. And the reason that's important is because since Microsoft's going to give out a dividend, which is, in this case, we'd be looking at 124, so about a 31-cent dividend most likely coming out. The stock price is expected to drop 31 cents on that day, and so you'll want to account for that when you do your modeling because it'll have an impact on the nature of the trades you make. At the same time, if you're doing something like a covered call or something where you own the stock, knowing that the dividend is before then is useful because you will be collecting that and it would offset that drop. And so it's a kind of a quick look through there. And so let's head back over to the slides again. Everyone's favorite part of a presentation. We also want to talk this week, we launched the Quantcha Challenge, which is a big thing for us. It is a 2-month campaign to trade options based on expert equity analysis. So this is about us taking expert trade ideas and then or specifically expert direction on equity, such as bullish or bearish ideas on given stocks, and then using Quantcha to find great option trades for them and then placing them in an account and doing everything right out in the open. It's sponsored by Tradier and Zacks, and we're using the Zacks Bull and Bear of the Day, which are published on, they're published every day, but we're using the ones that are published on Friday, and then we are running the specific trade ideas or running the actual trades and placing them in an account we have set aside for the campaign itself on Friday afternoons. And everything we're doing is as transparent as possible. We're recording the trading sessions. We're kind of recording some of the logic that goes into it. There's a bit of commentary, and so you can see everything that goes on and kind of see all the ups and downs of how the performance goes for the particular portfolio we're working on. And this past week we opened up 2 positions, a bullish position in Merit Medical and a bearish position on Las Vegas Sands. And we're gonna see how it goes over the next 8 trading sessions. So it'll be over by the end of June. And hopefully you'll get some better insight into how we use the tools here at Quantcha and some of the other ideas that we approach and how to take advantage of them. And once again, thank you. And if you've got any questions, please go ahead and hit us up at hello@quantcha.com or leave a question down in the comments. Thanks and happy trading.